Hey guys, today is 27th of Feb 2025, and I want to show you one of the cleanest trades I ever done with Gamma. It was so clean that I really want to show you guys how to use Gamma. And then I thought, oh, this is a good example of on how can you use Gamma in your trading. One of the things I have done, I used to do tons of reviews. I know some people say, oh, you need to look for overnight levels, highs and lows, and previous highs, previous lows. As you guys know, I also use daily levels, but I want to show you in this short video the cleanest trades with Gamma. I trade 4 or 5 times today. Um, it was really clean today, and that's what I want to show you. Look, so let's gonna start. Have a look at the price. First of all, this is a state. This is a screenshot of a state, which is the most expensive subscription for GEXbot. I think the guys have three subscriptions: Classic, which is the cheapest. Then you go State, which is in the middle, and then you go Order Flow, which kind of give you a deep understanding of the flows coming into the market. And I'm making a video. I'm preparing a video of this, and I'm gonna post it soon. But what's important of this is I'm going to explain how you can use Gamma in your trading and how can you actually benefit. And you don't need like tons of research or subscribing to these guys who make like pre-market research, etc. So look, we start the day. Market start to trade a little bit like kind of random, going higher, start to make some kind of supports, and then we have this excess of positive gamma. Just when you look into a state, the guys that already has, if they have already guessed it, this option profile gamma, we call these cyan bars on the right excess of positive gamma, right? And if you guys seen my videos before, we use this as pivots. So everyone knows in technical analysis, pivots are levels where the price tend to react, like tend to kind of be like a support or resistance. So the first trade I did today was shorting the NQ with some micros. I think I went short with 3 or 4 micros here. When the price crossed this level of excess of positive gamma, I went short, right? And we can see it here in a state. So again, this is order flow, options profile, sorry. And we can see that positive gamma coming in. And then we have in options profile gamma, we see how the price look. These two bars here, which are the excess of positive gamma, we see it in order flow here, right? This is kind of a nice way to see the market, and that's why order flow is a little bit more expensive. But also, the algorithm of GEXbot here is amazing because not only can show you the most important excess of positive gamma or negative gamma, as it is in here, but also it shows the most important flows like this one. I'm gonna talk about this one. And it's not like, when we see these the options change, if an institution came, right, and came with different options, for us, for the eye, for the human eye, it's very difficult to see which one of these bars or these cyan or red ones he did something that institution, right? So that's why we use order flow and we have this classification. But anyway, let me go back to this trade. So I short the market when the price crossed from above to below on the downside. We see that happened around 838 here in options profile gamma. So we have this gamma, which is again in options profile is called excess of positive gamma. It's just the language, right? I got some guys in the channel and in YouTube telling me, oh, but you say that is option excess of positive gamma, and then when we come to gets profile, we see that's kind of red, so that red is negative. So I'm gonna explain to you in a minute. Treat this as pivots, right? Especially if you use options profile gamma. This is my main tool. This is what I do. I just wait for these because, as I say in my previous videos, I only want to interact with the market where these guys are coming in, right? These options traders, big institutions are coming into the market and they're putting their trades, and they certainly look how they move the market today, right? So that's where I want to go with them. I don't want to be the liquidity of them. I want to go with them because the market maker, he needs to hedge these positions, right? And he needs liquidity. So, in the past, when I didn't know about gets profile or gets gamma exposure, people tend to fade these sell-offs, or they tend to fade the rallies, and they buy and buy. And what happened? Look, all the way down. They lose their accounts, they lose all the money. But when you have this excess of positive gamma, all you have to do is just wait for them. Don't do anything else. Don't trade here as I said before in my videos. I never trade on these levels. I only trade when the market interacts with these guys, because these guys are the options trader, right? They are the ones, let's put it that way. They're the sophisticated traders. They know what they're doing. So I want to go with them, right? So I short the market when it broke below here, right? And certainly, as you can see, guys, here, this is the spot price. The market start to trend nice, and then we start to see more positioning, right? It's like there are more positioning here, markets start to go down. But the other way I want to show you, the other thing I want to show you, sorry, is that, look, have a look, these two excess of positive gamma. Again, think of them as pivots, right? Don't think think of them like, okay, I know something is happening here. I know these options traders, institutions are coming here. That's where I want to interact, right? If the price somehow makes some support and rally, I want to go with them. But in this occasion, it broke the level, right, from above to below. And when it broke the level, that's a very good sign. Now, the other thing I saw, I looked this in, like, you see, I mean, in my screens, I go order flow, I go options profile gamma, because I want to see my excess of positive gamma. Again, this is just the language we use. Don't get confused, because we call it positive because it's coming from calls, it's coming from puts. I'm gonna show you in a minute why. Look, those two levels of gamma are here, right? And this basically is an excess of calls versus puts, right? So as I said before in other videos, when options traders come into the market and market maker manage to match their orders or their flows, that's fine. We don't see that, because that doesn't create any need for delta hedge or gamma hedge, right? So that's nothing happens. But if there is an imbalance in the calls and puts, at least from this gets profile, that's where we see this. So clearly we see this is an imbalance of puts, right? So there are more puts here putting into the market. So don't get confused that, oh, because this is a positive gamma, so it's coming from a positive flow. No, look, you see, this is an imbalance in the put side. Remember, gets profile measures the imbalance between puts and calls. So that kind of give you, okay, someone is pushing the market, someone is pushing the market there. So if the price managed to break this below, that's a good sign that we might gonna have some sell-off or some downtrend. So that was my first trade. So as you can see, it was perfect. It was the easiest trade just to go short here. I went short with some micros, MNAQ, and then the prices start to go lower. And then have a look at this. This is just a little bit of market structure. You see, market bounce, found the first bounce, couldn't make a resistance, it couldn't rally anymore, and here was very weak, and it continued the way down. Right? We're talking about around 9:50 in the morning. If we look on this at 9:50 in the morning, right, we can see a little bit. You see here, the prices start to go up, start to, oh, sorry, that was below. Let me go back a little bit. Here we go. That was, let me put it here so we can see the time. So the time was around 9:47, right? And have a look. Let me put it bigger. And this one, I move it to the right. Have a look here. We don't have any excess of positive gamma, but as soon as the price get there, look, you see that? Someone came into the market with more flows, right? And it's not coincidence. Listen, this is not coincidence. This is data. This, we see this every day. Market was rally. I put it again. Look, nothing. The market have came down, have a little bit of bounce. We have nothing here. As you guys remember, I don't trade these kind of negative gamma here. Listen, I just wait for these pivots. If something happen, if the price interacts with the pivots, that's where I want to go. So I was there watching there, see where the rally was gonna go, and then you see that we have this excess of positive gamma came in at around 9:47, And that's it, guys. That was the top of that mini retracement. So all I have to do is I wait for this low to be broken, right? And that's when I went for min. I went short with minis. I load one mini, right? Because we have this stop here. Remember, these are pivots. Treat them as pivots. If have a look at my videos before where I explain option profile, but I went with one mini because I have one stop here of one target. Then I have another target here. So the first target was 21,147 and the second target was 21,080. But the big target was this one, 900, around 900. So I was short already one mini and four micros. So have a look. The price keep going nicely, right? Break this one as well on the downside, and it was like very clean. Did I took all my trade to this low? No. I took my profits because that was very quick. I took my profits on this level, which is the 21,091 more or less, or 21,020. That's where I took my profits. It was a really nice sell-off, and I was happy with the money. But we were discussing in the chat in Discord with GEXbot guys, the traders. Listen, this is the target. We need to wait for the price to go here. That's the target. I took my profits earlier. I should have left a runner, and I didn't. But anyway, I have a good profits already, and I did my target with that trade. And look, the price actually went to 20,900, and it bounced perfectly there. Yeah, look, didn't go below. That's what I say. Treat these levels as pivots, right? If the market is coming from above to below, these are pivots, right? And what's the difference between these levels here and this one? Look how big is this one. We're talking about 63 millions of gamma here. Where I took my profit, which was around here, this one, um, we have 7 millions of gamma, right? So basically, as you can see, the price, it was like butter all the way down. But here we have 63 millions of gamma. So that's a pivot. The price pivot, I miss it. I miss this one because I'm testing the API in Atas. I trade with Atas and it's fantastic. So I was testing the API. I was like changing colors and stuff. And then it was so quick. I didn't went long in here, but the easiest way is to go long here and put your stop loss somewhere below all these pivots levels. But anyway, what I did, I wait for the price. So I know this was an big pivot. 63 millions of gamma is quite a lot. So the price went there, a bounce, retrace, and I went long here. So if I put it here, I went long for my trade here. Why I went long here? Because I have a bottom in place, and then this high was broken, right? So for me, it was easy to just go long there. I have a nice profits from all the way down, right? And then I put my stop loss just around here. It's a nice trade. Although I didn't went long. I should have, but to be honest, I wasn't focused on this. I was focused on ATAS, on changing the settings. But anyway, this gave me the confidence that all right, we're bottoming, and then we have some space to go up. So this was my stop loss here. Oh, sorry. Let's put in this one. This was my stop loss for my second mini, and this was my entry. So that was a nice trade. Where I took my profits, well, I was looking at this gamma options profile, and look, you see this important gamma is not the biggest one because the biggest one is here. The biggest the biggest negative gamma level is this one, 21,458. But this one is important, right? So what I was doing, I was trailing the stops, and I took profits around here, right? So I took profits on my second trade with one mini in 21,150. Okay, so that was my nice target there. And then I just wait. As you can see, look, in this time, nothing happened, right? And that's what I say, guys, don't trade. If you trade with gamma, just don't trade outside gamma. Just wait for gamma levels like this one. I have a confirmation here because this is market structure, but I make good money around here. So I have my stop loss in case this retrace, but it's only because I made some money on this gamma level. And look, this was another nice trade here with the maximum level of positive gamma. I went long here because I have confirmation of bottoming. 63 millions of gamma is quite a lot. And then that's it. I took my profits around here, this level. Observe that. I took my profits there, here, and then just it. I just didn't do anything else. I just wait. We have some gamma exposure, which I didn't take the trade, but for instance, this one, if you can see, this is a positive convexity, right? And we have positive gas gamma exposure. So this, I'm going to explain in a video, but this is a retracement. On the way up, this is a retracement. And I put it in the chat. Look, guys, we got positive gamma. So this is going to be a reversal. Sorry, not retracement, reversal. And we combine with gamma exposure. Basically, it means that the cost of upside has been lifted. So options are becoming options above this level. Sorry, are becoming more expensive, right? And the liquidity is being taken. That's what it means. I'm gonna explain it in a video that I'm preparing, but that's what you do. So that was the mark for this trade. I didn't take it, to be honest. I'm still testing this order flow, but it seems to be working very good. And I just waiting. I just waiting, and then look. Then we have this negative gamma here. Let me delete this. We don't need it, right? Then we have this negative gamma here. You see it? And what did I did? I just wait for the market to interact, right? That's what I was doing. Nothing else. Just wait for the price to interact there. Did I sell here? No, no. I never sell in this area. I didn't do anything on this level. What I did, I just wait for the market to interact with this price. So look, we have a high. Obviously, we have a move down. We have a bounce, a retracement. Then we have this high here, right? Then we tried to take it. We couldn't, but have a look this. There is an excess of gamma here as well. This one, you see it? But the price didn't touch it. It just found like resistance there. So that was my my clue number one. We have this excess of gamma, positive gamma here, and the price couldn't test it, and then went to the maximum negative gamma here. So what did I did? I just was waiting to see what happened. It found some resistance, support, resistance, but you see every time it's lower. The higher highs is not making higher highs, sorry, it's making higher lows. And then I sold the market when it broke this level. You see? So you could have sell gamma here and put your stop loss around this high level. But I was just waiting and see, I explained this in my videos. Every time, let's put in a different color. I've seen this so many times. Look, so this is the first bounce. How long did it take? Sorry. Sorry. It took this amount of time. I'm gonna do it with this one. It took this amount of time. Look, from here up to here. You guys can see it. Oop, there you go. It took this amount of time. Then the second time, look, it was shorter. The time. This is what I say. Sometimes the classical technical analysis say the higher lows, we have lower lows, but then they never take on account the time for how long it's gonna take the bulls or the bears to take over. And look, every time it's getting shorter. Oh, sorry. Every time it's getting shorter until the last one, it just went. Let me do this. Here you go. It just went. It went down all this weight here. So this is, I did my last trade, and this was scalping with 5 minutes. And all these scalps, I did it with 5 minutes, right? But, this is technical analysis. It's not technical analysis. It's kind of market structure. But why did I take the chance to sell the market here? Yes, I can see that, buyers they're getting weaker and weaker every time. Sellers, they're getting stronger. But really, what gave me the confidence to trade and to go short there was this maximum negative gamma. Okay, because I know that there is an interest there. Options traders have interest there. There are flows there, and I know market makers they need to hedge their positions there, right? So my stop loss was like kind of above here, and that's it. I didn't took the whole trade. I didn't close here, but another thing I'm gonna show you guys of why, which is so important. And I mean, I'm making a video here. I'm gonna post it next time. But have a look this. Oh, sorry. Look, this is an excess of positive gamma. I'll put another color, and I'm gonna highlight here because I'm gonna finish the video with that. Excess of positive gamma is a sign of reversal. Why? Because it's just basically telling me that options traders, remember they trade volatility, they don't trade direction. So basically what they're doing, they are expecting this kind of move is going to change. This is what they're doing. So they say, okay, market is moving up, this regime is going to change, right? And that's when we see this order flow. So we have the regime here as well. It's just the same thing, but look, we got positive convexity telling me options traders are betting that the current regime is changing, and also they are lift. So basically, they are lifting. They're making the options above here more expensive, right? So the cost of upside has been lifted. So this is becoming more expensive, right? So that's also a reversal. So this positive convexity combined with positive gas or positive gamma exposure is basically a signal for reversal. And that's what I was waiting for the price to go to this gamma level. And then I wanted to interact here. But probably in the future, what I'm going to do, I'm going to sell on these signals because they're so powerful. Look, I could have sold here and put my stop loss just above here. Nothing is for sure, but I could have sell as soon as I saw the signal and I can put my stop loss here. Or I can just put my stop loss on this previous high, you see? And I'm risking nothing. Look that what I'm risking here, from here is nothing and all that I could have done, right? But I enter here because I like, I'm in the process of learning how to use order flow better because gamma is already working very well. Listen, this is my age. I don't trade anything else. I don't put anything else apart from a little bit of market structure. But 95% of what I do is only interact in the market with this gamma, right? So today was a good day. It was the cleanest gamma trade that I've done in several weeks, I would say. But anyway, guys, I hope this helps. And anyway, I'm gonna put another video about order flow. All right, guys, see you.